Howdy, boys and girls. Welcome to Liberty Call. Today is, what day is this? Thursday, May 9th, 2024. Hope you are having a fantastical day out there in the interwebs. If my mic sounds a little weird, I did some surgery on it earlier today. The connector for the USB, every time I move it around, it like disconnect, and I've been in the middle of a conference call or a conversation with a client, and it started clicking in and out, and it just pain in the butt. So anyway, it's a good mic. I just had to do a little surgery on it with soldering iron. So anyways, hope you're having a good day out there. It is overcast and gross here today. It's a Houston winter day. That's how I would put it. It's overcast. It's kind of misty. It's not very warm. So anyways, all right. Well, if it is your first time watching Liberty Call, if you could do me a favor, give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. What is this on my screen? My wife sent me something. Not sure what that means. Anyways, we'll deal with that later. All right. Well, let's go ahead and where am I? Let's go ahead and jump over to the markets. Let's see how they finished for today. The Dow Jones was up 0.85%, 331 points, closed at 39,387. The S&P 500 was up 0.53%, closed at 5215. NASDAQ up 0.27%, closed at 16,346. The VIX fell 2.15% today. It's at 1272. Canada up 0.52%, Brazil down 0.98%, and Mexico Mexico up 1.4%. Our friends over in Europe, Germany was up 0.98%, the UK up a third, France up 0.69%, the Netherlands up 0.51%, Spain down 0.92%, Italy up 0.55%, Switzerland up 0.78%, and Portugal up 1.59%. Russian exchanges were closed today, so we'll skip those and go to the Asian markets. The Nikkei in Japan was down 0.34%, Australia down 1.06%, New Zealand down 0.44%. In China, the Shanghai was up 0.83%, the Shenzhen Component up 1.55%, China A50 up 0.3%, DJ Shanghai up 1.07%, Hang Seng up 1.22%, and the Taiwan weighted has not been open since the 7th, so we'll go ahead and skip that. All right. So good stuff. I know. You feel smarter? Really? I don't. All right. Let's go ahead and hop into the market recap, see what happened today. Wall Street gains as jobless claims data reinforces a rate cut hopes. U.S. stock indexes rose on Thursday, driven by optimism that a softening labor market could prompt the Federal Reserve to consider interest rate cuts later this year. Again, I don't think they're cutting rates unless something bad happens. And because everyone's hoping that the Fed's going to lower rates, which is going to be a boost to the stock market. But if they're cutting rates because something bad's going on, the market's probably going down. So I just don't see how that's going to really help things. The Dow Jones Industrial Average extended gains for the seventh consecutive session, buoyed by data showing an increase in weekly jobless claims to 231,000, surpassing economists' expectations of 215,000 claims. Investors interpreted the rise in jobless claims as favorable for the Fed, indicating a potentially economic slowdown that could help alleviate inflationary pressures. Last week's job data, which revealed slowing job growth in April and a three-year low in job openings for March, led traders to anticipate one or two rate cuts by the Fed in 2024, a shift from earlier expectations of just one cut. And again, I would look at, what I'm paying attention to are the consumer spending numbers, and the jobs numbers are lagging indicators. So we really, we'll see spending slow down. Again, this is just my hypothesis. We'll see spending slow down. We'll start to see some more deterioration in some of the other economic numbers. And then we'll see it in the jobs numbers last. Because again, companies aren't going to fire people at the first sign of, instability. Let's see here. Market sectors responded positively with 10 of 11 major S&P sectors advancing, notably led by a 1.9% increase in the real estate index. Equinix, a data center operator, saw a significant surge of 10.3% following its first quarter results. However, ARM Holdings experienced a slight dip of 1.3% due to a revenue forecast that fell below expectations. Larger competitor NVIDIA also declined by 1.7% ahead of its earnings report. Tech giants like Apple, Amazon, and Meta generally traded higher, while Roblox faced a notable slump of 20.5%. Woo! That's a pretty big slump after revising its annual bookings forecast amid economic uncertainty and inflationary concerns. Despite Robinhood's markets beating first quarter profit estimates, its stock declined by 3.8%, while Spirit Airlines surged 12.1%, rebounding from a recent record low earlier in the week. Overall, the market's focus on the labor market data and potential rate cuts continued to drive investor sentiment, particularly within specific sectors responding to earnings announcements and economic indicators. Again, like I said, if the Fed's lowering rates, probably something bad is going on in the economy or the stock markets or both. So I don't know if that's really going to be the boost that the traders really think is going to just send the market headed in another positive direction for another year or two. I don't see. Again, I could be completely wrong. I mean, it's I don't claim to be I don't have a crystal ball. I'm just looking at the data and giving you an opinion. Now, if they inject $5 or $6 trillion into the economy, all bets are off. I mean, the markets might take off like they did in 2020 and 2021 again, and who knows how much damage that's going to cause. All right, next up, U.S. weekly jobless claims highest in more than 8 months as labor market eases. The latest report from the Labor Department reveals a concerning trend in the U.S. labor market. The new claims for unemployment benefits reaching their highest level in over 8 months. This uptick in jobless claims follows recent indicators of a cooling economy, including lackluster job growth in April and a significant drop in job openings in March. The increase in unemployment claims, rising by 22,000 to 231,000 for the week ending May 4th, marks the largest jump in nearly 4 months and surpasses economists' expectations of 215,000 claims. These figures represent a notable shift from the range of 194 to 225,000 claims seen earlier in the year. And again, 1 week does not make a trend. If this was a month or 6 weeks like this, then maybe we would have something to talk about. But at this point, again, I wouldn't get too bunched up. Things move slow in the economy until they don't. So, it's kind of like the market meltdown back in 2008 and 2009. I mean, it started as a trickle and just started, snowballing and snowballing and snowballing. And eventually by the beginning of 2009 was like in avalanche mode. Where were we? Experts attribute part of this rise to seasonal factors, including the conclusion of school spring breaks, which can complicate the adjustment process for seasonal data. See, the problem is they adjust all this data so much, it's tough to tell what's really going on. And why do people keep calling my damn phone? Let's see. Unadjusted claims also saw a substantial increase, particularly in states like New York, possibly reflecting specific employment situations such as layoffs affecting Citigroup employees. While sentiment surveys and economic indicators have been signaling a significant labor market slowdown, companies appear to be cutting back on new hiring while retaining existing workers after facing challenges in finding labor during and after the pandemic. Financial markets are responding to these developments with expectations growing for the Federal Reserve to initiate interest rate cuts as early as July or September to counteract a weakening economic demand. The recent decision by the Federal Reserve to hold its benchmark interest rate unchanged reflects a cautious approach amid evolving economic conditions. Overall, the labor market is undergoing a rebalancing phase following previous interest rate hikes by the Fed, with ongoing scrutiny on unemployment trends and their implications for further monetary policy decisions. All right. Good stuff. I know. Up next, our friend, the mailman came already, and I forgot to take the mail out. Oops. This one comes from Zero Hedge. This article is titled, Peter Schiff, Rate Hikes on the Horizon. And see what Mr. Schiff seems to think about rate hikes. Peter Schiff provides a comprehensive review of recent market and economic developments. In his latest episode, he highlights the stock market's poor performance in April, attributing part of the decline to growing speculation about the Federal Reserve's potential shift towards raising interest rates instead of cutting them. Peter emphasizes the Fed's historical struggles with inflation, arguing that the central bank's ability to achieve its 2% target is doubtful given past trends. If you remember yesterday's article, we covered about the Fed. I mean, they're pretty much the arsonists who created all these problems. Regarding Fed Chair Jerome Powell, Peter criticizes his reluctance to openly challenge federal fiscal policy, which he views as a critical duty of an independent central bank. He contrasts Powell's approach with that of former Fed Chair Paul Volcker, known for his vocal criticism of government actions. Examining recent corporate events, Peter identifies declining stock prices for major companies like Starbucks as an indicator of potential stagflation ahead. He predicts challenges for companies like Starbucks in navigating a stagflationary environment that Powell seems unwilling to acknowledge. Peter also reflects on his recent Bitcoin debate, focusing on controversial issues of know your client and anti-money laundering regulations. He argues that these regulations primarily target tax evasion rather than terrorism, diverging from the intended purpose. Moreover, Peter delves into the U.S. tax policy, highlighting the country's historical roots as a tax protesting nation and expressing concern over modern tax burdens. While sharing common ground with his debate opponent, Eric Voorhees, on various topics, Peter maintains skepticism about Bitcoin's role in advancing sound monetary policies, preferring a return to gold as a solution for reining in government control over currencies. Through these insights, Peter offers a critical perspective on economic policies, market dynamics, and the role of cryptocurrencies within the broader financial landscape. So, yeah, Peter, he's more of a pessimist than I am. So, I mean, I think we're going to go through a river of crap. I'm more positive about the overall outcome, and I'm more positive around cryptocurrencies personally. He's not a big fan of them. I mean, I love gold, but I think there is a place for crypto out there. Next up, also from Zero Hedge, we need to talk about recession risk again. This comes from Simon White, a Bloomberg macro strategist. So let's see what Simon has to say here. All right, Mr. White warns of an increasing likelihood of a U.S. Recession based on evolving economic indicators. Soft survey data is showing signs of deterioration, aligning with an already fragile hard data. While expectations of a downturn are currently subdued, they could swiftly rise, like I mentioned earlier. White employs an analogy of an S-curve to describe recession dynamics, highlighting the abrupt nature of downturns rather than the smooth transition commonly assumed by traditional recession models. Recent stock behavior suggests a market anticipating a soft landing, not factoring in the potential impacts of recession. Mr. White emphasizes historical data showing that rate cuts during an economic slump typically lead to more severe equity outcomes than currently priced into the markets. The shift in recession risk assessment is prompted by weakening soft data coinciding with fragile hard data, notably evidenced by manufacturing ISM dropping below 50 in April. Service sector indicators are also slipping, suggesting broader economic slowdown. While White stresses the importance of vigilance for investors, noting that stocks become vulnerable before an onset of recession, often experiencing sharp drawdowns, bond yields are expected to see retrenchment through less pronounced due to persistent inflationary pressures and structural biases in U.S. Treasury bond ownership. Overall, White advises investors to adopt a more agile stance given the evolving economic landscape, where the probability of near-term recessions remain low but could escalate rapidly. The shifting outlook necessitates careful monitoring and flexibility in investment strategies to navigate potential market volatility in the current economic cycle. It's a mess out there, folks. Got to be careful. And one last article here has to do with finance, but it does a little bit. This one also from Zero Hedge. House passes election integrity bill to restore citizenship question to the census. I'd like to see a citizenship question on every time you vote. Are you a citizen or are you not? If you lie, you get the gallows. All right, let's see who's in favor of this. So, like I said, it's really not financial related, but it is because, if people are voting who shouldn't be voting, who vote in people who are going to steal more from us, it is kind of financial. All right. The House of Representatives passed the Equal Representation Act led by Chuck Edwards, aiming to add citizenship question to the next U.S. Census, which again won't be till 2030. This measure passed along party lines 206 to 202, seeks to ensure that only American citizens are considered in determining congressional seat apportionment and electoral college votes. Yeah, because there's the problem. If you got all these illegals living in, say, California, Texas, New Mexico, Arizona, and they push up the total population, then that's how they base the number of congressional seats. So I've seen the numbers. I think based upon the illegal population in California, I think they get 5 or 6 extra seats just based on that. Which, is that fair? I mean, originally when it was set up, it was, the census was based, upon just population, and that's how the number of seats in the Congress was established. But if you've got, a huge chunk in your state that aren't, technically voters for the federal republic, they shouldn't count towards representation in office personally. I mean, that's just my own personal view of it. But where were we? It directs the Census Bureau to include citizenship question in the decennial census, emphasizing that this data is crucial for policymakers. Rep. Edwards argues that counting illegal aliens distorts representation, citing a study that estimates their impact on House seats. Conservatives support the bill, emphasizing electoral integrity and fairness in representation. House Speaker Mike Johnson, who's a traitor in my opinion, criticizes sanctuary policies, while House Committee on Oversight and Accountability Chairman James Comer links the bill to the current border crisis, asserting that federal representation should reflect citizens only. I agree with that. However, the White House opposes the bill. Shocking, because, I assume both sides are cheating, but the left's just better at it. Citing concerns about its constitutionality, which I don't know why they ever care. I mean, they're trying to pay off student loans, which has zero constitutionality to it. But hey, it drives votes. And the Census Bureau's mandated duty to count all persons as per the 14th Amendment. The administration argues that the bill would increase census costs and hinder accurate data collection. Okay, sure. The initiative echoes previous efforts during the Trump administration when Commerce Secretary Wilbur Ross attempted to add a citizenship question to the 2020 census, which was blocked by the Supreme Court. The bill's fate in the Senate remains uncertain due to Democratic control, underscoring ongoing debates about immigration, representation, and constitutional principles in U.S. politics. I don't think any of the politicians have any constitutional principles. I think we're tax cattle. We're here to rob so that they can enrich their friends in the military and welfare industrial complexes, and to, continue their hegemony around the globe. So, is what it is. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. If you happen to still be watching this show this late in the program, please give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. Hope everyone has a wonderful evening, and I shall talk to you. Yes, you again. There it is. I can never. The camera's right there, but the screen is right here. So anyways, hope you have a wonderful evening, and I'll talk to you again next time. Adios.